Doug Simon from Tredas is our corn and soybean market analyst this week. The U.S. Department of Agriculture is projecting U.S. farmers will produce 14.1 billion bushels of corn this year, down from 15.1 in 2016. The agency's May crop report, released Wednesday, also forecasted a 4.3 billion bushel soybean crop, only slightly lower than last year. The USDA's changes to supply and demand led to a decrease in corn ending stocks for 2017-18, but an increase to ending stocks in soybeans. We talked with Doug Thursday morning and began by asking for his overall thoughts on the USDA's estimates.
The report had acres from March 31st planting intentions and had average yields, and so there were really no big surprises there. Big questions are going to be about exports and about ethanol and those type of numbers. And they actually had the corn exports down by about 350 million bushels, which is about, that's a pretty big number. But the beet number is actually up by 100 million bushels, which is a little bit surprising.
That corn number, why is it so drastic?
Well, we've had really good export commitments for both corn, beans, and wheat this year because of the reduced crops in South America and Brazil on corn last year and the soybeans in Argentina. And so we've had a really good export book this year, but they'll be back in the market next year being more aggressive competitors. And so our exports would be expected to be down next year.
The other big international player is China. They're the second largest producer behind the U.S. Now, they're also lowering their corn acres. Can you explain why that's happening and what's going on over there?
Well, they've got huge carryover stocks, and their stocks can't be in great shape. And so they've been trying to subsidize the sales and to move that through the system as they can to make sure that corn just doesn't rot in the ground. But then they're also, trying to increase the production of soybeans, which they're a big importer of, and reduce the acreage on the corn, and try to balance that out a little bit more than where they are right now.
You also mentioned soybeans up 100 million bushels in exports. Why the benefit?
Well, I see some other analysts dropping those numbers because of if we see more export competition from Argentina and Brazil next year. So that's a little bit surprising. But we've had surprisingly strong imports from China over a long period of time. USDA's consistently underestimated those. Perhaps maybe they are right. Maybe we'll bump those up by 100 million bushels. But that's about $1 swing in the market if they're flat on exports next year, or if they bump them up 100 million.
Were you surprised at that projection for next year's soybean crop in Brazil, which would be lower than what they actually produced this year? And the only reason it's surprising because they've kind of stair-stepped up for the last 10 years or so.
Well, they have, and CONAB actually on Thursday morning increased their numbers on corn and beans there, so their production's jumping up a little bit. But no, I'm not too terribly surprised by that.
The ethanol number, another 50 million bushels for next year.
That's encouraging.
Yeah, what does that mean for the industry?
That's very encouraging. I think the nice thing is Sonny Perdue, in one of his comments about the overall farm policy, was encouraging towards the RFS standards, which should, I think, be supportive to the ethanol side of it. And if you look at oil prices, they've dropped $10 here a barrel. I think you drop price of oil, basically you increase demand and you blend more ethanol, so that should be favorable. So those things are all positive for the ethanol industry.
So update me on planting progress across country and here in Nebraska especially.
Well, if you look at different areas, they're a little bit ahead of pace actually in Illinois and Indiana, about on par in Ohio and Iowa, which with all the rain they've had, everybody's really worried more about those areas. And then if you look at the areas where it's been drier up in the Dakotas and relatively drier up in Minnesota, they're actually behind. So it's kind of a conundrum in my mind. But so hopefully we'll see a little bit better progress over time here. But the rain that we keep getting through that, what I would consider to be southern Illinois, southern Indiana, it's definitely some really bad in that area. But overall, you got to wonder if maybe we lose 1 million acres out there in that area, but we could potentially see some more acres planted up in that Dakota area. That tends to be where we lose acres. They historically are wetter up there, and they've had, if you look at the drought monitor map, that's the only area of yellow is up on that North Dakota, South Dakota border area.
Before we talk about selling strategies, where are the funds at right now?
They're very short. If you look at corn plus beans plus wheat plus meal plus the cattle, even though they're very long cattle, if you look at that overall complex, there's a lot of short interest in that, which tends to, at some point, they get scared out of those positions, and we should see some type of rally based on that. Just because I'm not real optimistic in terms of prices, just because of the overwhelming stocks that we've got in the U.S. and the world. But when those funds jump around, you can see some 30-cent price swings in the price of corn and 50 cents to 75 cents in the beans because of that.
Yeah, it's been really quiet over the last month or so. Is the market just trying to figure out where to go with all the the news about planting and where the acres go?
That's correct. And the acreage numbers, last time I was here, we were just before the planting intentions and trying to figure out how many acres of corn. And we came in right at 90 on the corn, and the beans are just below at 89.5. So right away when that report came out in March, everybody's calculating in their head, okay, what happens if we drop the yield on corn from 170 down to 165, and what implications that have for price? So the market's really range bound right now, trying to wait and determine what the weather's going to be like during the summer. I think everybody's going to be trying to figure out. There's been talk about moving toward El Nino. It seems like now Australians, the Bureau of Meteorology, have kind of backed that off and they're more neutral. So the big question is for the summer, my guess is we're probably going to be a little more volatile weather pattern. Might not be stuck in a really favorable El Nino type situation, not in a really hot, dry scenario, but probably some ups and downs, which hopefully will give us some chances to sell corn at some higher prices. If we get those funds to cover, see some jumps up toward $4, I think people definitely need to be looking at selling that. Soybeans are undervalued probably right now relative to the seasonals are a little stronger going into the summer. Hopefully we get some rebounds on those soybeans, but any rebounds we do get, people need to be looking at selling strategies where you hedge, use some hedge derives, use some puts, do some things like looking at some different scenarios based on the producer's exact situation.
Your preference, though, for old crop would be to wait a little bit?
Well, the basis levels during the time when people are in the field have actually firmed up on both the soybeans and the corn. We're 20 under up at Columbus right now, which is, if you look at that versus the May, that's essentially a 12 under. And we traded 10 under the D's back at Thanksgiving, Christmas time. So we're kind of in the same range as what we were through the marketing year on the corn. So it's pretty favorable basis right now. The futures aren't really attractive this week because we've been down a little bit earlier in the week. So I'd like to see a little firmer futures price, but I think the basis levels for corn and beans are both pretty attractive right now relative to where we've been through the season.